Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together, leave it in the comments below and we'll do it live. And finally, remember, this is not financial advice. This is all for entertainment purposes only. Cool, let's look at our open positions. First one up here is a T-bill auction we have tomorrow morning, so just ignore that. XBI, we're trying to roll. We're trying to get this straight across. We're closing January short call spread and opening a February short call spread. Same strikes, same everything. No credit received, just straight across zero. Okay, so we've got this open, good till canceled. We've got till next week, Friday's expiration to get this done. USO, we opened up this put 2 days ago, shorted it, short put, not a spread. Opened it at 70, trying to get to 35. If oil keeps going up today, this may close today. If not, hopefully soon. XHB trying to get to 25. Down today, but not by much. That's fine. We've got some time. Roku trying to get to 34. This was the roll from December to January. So far, so good. SPY, we rolled this one as well. We may have to roll this one again and just keep pushing it out till things move in our direction. And IWM, this one's right on the border here. This one's going to be a photo finish again, so this will be exciting to watch. Trying to get to 20. Right now, mark's at 72. We shorted the 197 and bought the 200 short call spread total. Okay? Let's look for new opportunities. First up, we're going to check in with Apple. I think Apple has now got its third downgrade of the year. Redburn downgrades at Apple today to neutral. Price target's 200. Earnings are February 1st. Here's a chart. Came down, had a bad start to the year, bounced off the 200-day, coming back somewhat. Today's the 10th, so we've got a couple weeks till earnings. Preferably, I'd rather have a month or more before earnings to do something. So I think we'll hold on this one, okay? Still trading for new positions opening, February expiration. If you did want to sell the put side, you'd want to sell the 170. Not much volatility here, even though we're getting closer to earnings. But if you want to sell the 170, either cash secured or buy the 165 for the spread. What's the math on that? 112 minus 66 divided by 2 divided by 500. The spread only pays 4.6%. Call side, the 195's too close. The 200's too far out. If you sold 200, bought 205, it's not worth it. Let's hold on Apple till after earnings. Next, Toast, T-O-S-T. This is a restaurant POS system company. Earnings are on the 15th. So more than a month from now. That's good. Goldman Sachs upgrades Toast to buy today. $24 price target. Here's our chart. So it opened up above the 200-day and has already sold off quite a bit today. It may have missed the move on this one. Also looks like it hit resistance. You have resistance from back here in May of 23. Also August of 23. So it hit this resistance almost perfectly right on the nose. I don't know if you can see it. And it's sold off. So if you sold a call spread on the open, you may actually already be out of it. Liquidity's pretty good here. Let's skip the put side. Call side, you'd have to sell 22 and buy 24. 42 minus 19 divided by 2 divided by 200. That's actually 5.7. That's not bad. If you sold 22 and bought 24 for a February expiration, where's 22 on the chart? 22 is right about here. That seems fair. What was the price target for Goldman? $24. Okay. I think we missed the boat on this one. Keep an eye on this one during the day. Hey, if while you're at work today this thing rallies back up to say around $19 or $20 a share, then sell the call spread then. But at this point, with the move's already been made. All right, moving on. Home Depot, HD. Up today. Earnings are February 20th, more than a month. Had an upgrade from somebody today. Webbush upgrades Home Depot today to outperform. It's got a nice bump there. We are not near all-time highs. It's had this big run up like everybody else since October. It's gone from 277 to 352. Just judging by the price action, it looks like it may continue up this way. Next spot for resistance would be around 365. So what I would do at this point is wait for price movement to move above this former top and wait for 365 and then sell a call spread at 365. Make a note of it. Let's look at the call side. If we did open position today, short call, you'd want to sell the 370 and buy the 375. Liquidity's okay here. Not the best. You got a 20-cent spread here. $370 is a little close as well. 215 minus 133 divided by 2 divided by 500, 8.2%. This 370 is a little close. That's why you're getting paid so much. The closer you get to the at the money, the more you're going to get paid. This one's interesting. We'll keep an eye on this one. Okay? We'll follow up later. And we got a little bit of time before earnings on the 20th. Next, Unity. No news specifically on this one. Just a follow-up from earlier this week. Next earnings are on the 26th of February. Here's our chart. Lower high, lower high, lower high. Call side looks interesting. If you sold the 44 and bought the 47, that's a $300 spread. 83 minus 48 divided by 2 divided by 300, almost 6%. That's not bad. On the put side, if you sold 30 and bought 27, 44 minus 17 divided by 2 divided by 300, 4.5% there. 30 on the chart. Way down here. Both of these seem fairly priced. You still have some call skew with anticipation of it hitting around the 200-day and bouncing back up. You should get a bounce right about here. You'll have support from this peak back in early December and the 200-day. Those two in combination should give it a small bounce up It may not be much, but it would still be a bounce. We'll keep it on the list. I think waiting for it to get around 33. Next up, we'll follow up with the buyout of Juniper and HPE from yesterday. First up, HPE. So the deal was announced during the day yesterday, but approved after the close yesterday. So HPE was down because of it. I think they have to take on a lot of debt just to make the deal happen. That's why. So the shareholders are concerned about the amount of debt they need to take on, but bouncing back slightly today. It did close beneath the 200-day, so that's something to keep an eye on. Earnings March 5th, so we got plenty of time. You zoom out here, we've got double top, maybe a triple top here, an ascending trend line here. Let's look at the puts on this one. Nah, you'd have to sell 15, you don't get paid for it. You get 10 cents. Juniper. Earnings are on the 30th. That may not matter. Downgrades Juniper. Today's the 10th. Yeah, downgrade from hold to hold from buy. Noted. If this deal does fall apart, this thing will come crashing down. Are there more strikes available on the call side? There are. So, yesterday when the announcement happened, it shot up, but no strikes are available. It doesn't seem to be there's much volume or open interest at this point. So perhaps down the line, we'll just keep an eye on it. Nothing to do here yet, though. Everything's zeroed out. Shopify. SHOP. Good liquidity on this one so far, so good. Earnings, February 21st, great. Good move up, very slow ascent upward. We got this channel forming on both the peaks and the lows. Good. Could catch resistance. Where are we at? Could catch resistance right here, or I'm already got and sold off. Next spot for resistance would be 84, if not 88. It's on the call side as long as you move past, as long as your short strike is past 88. Let's see what they got. If you sold the 95 and bought the 100, I kind of like this one. Do the math. 132 minus 77 divided by 2 divided by 500, 5.5. That's not bad. On the put side, if you sold, you'd have to sell 65. It's too far out to get paid for it. Sell 65 by 60. 73 minus 35 divided by 2 divided by 500, 3.8. So sell 95 by 100. $95's up here. It's possible earnings are included in this expiration. I think they are. That's why. $95. Come back later. Make a note of this one. Next is Merck. MRK. Zoom out here. I think it was at all-time highs and is selling off slightly. So this big move up. We had the JP Morgan Health Conference this past week. So a lot of news, especially with healthcare. Healthcare stocks have been on a tear. We looked at Moderna as well. These things have moved up way too far, way too fast. It's gone from 108-ish up to 120 in a week. Those kind of parabolic moves are unsustainable. Let's look at the call side. Well, first, earnings are February 1st, 3 weeks out. That makes things tough. Briefly hit all-time highs here. Call side, yikes, this one's close. If you sold 125 and bought 130, you've got 3 weeks to be out before earnings. 72 minus 21 divided by 2 divided by 500, 5%. I don't think it's worth it. I skip the call side here. Put side, skip it as well. Next, NVIDIA. All-time high right now. Earnings are on the 21st. So, had the gap up after earnings. It's kind of channeled it now. This past 5-6 days, it's been on a tear again. So when you have these big upward moves like that, so far so fast, they have to have some pullback at some point. I know we looked at this one yesterday. So this expiration does not include earnings. So we don't have to worry about earnings for the February expiration. That's good. If you sold 605, you go farther out on this one. If you sold 610 and bought 615, 602 minus 535 divided by 2 divided by 500, 6.7% there. That's not bad. 610 on the chart. 610 is up here. Doesn't mean it can't get there. We'll come back to this one too. Okay. So far, I like Shopify, I like NVIDIA. Let's look at JP Morgan. Selling off a little bit. Someone recommended earlier this week to sell call side JP Morgan. We do have earnings on Friday, and we don't like to open up positions before earnings, but since it's moved up so much since October and it's had no sell-off since then, very like 1 or 2 days here and there, if the earnings aren't perfect, this thing should come down slightly. So I wouldn't be opposed to opening up a new position before earnings. He sold the 180, bought the 185. 96 minus 40 divided by 2 divided by 500, 5.6. So maybe we'll open this one on Thursday. It's JP Morgan, good liquidity. And as all these bank stocks go into earnings, they are priced to perfection. So any little bit of negative news will bring these down. Cool. Next, today's Wednesday, right? So we'll follow up Thursday, tomorrow. We've got CPI tomorrow. So if JP Morgan's doing well tomorrow, we'll open up a call spread the day before earnings. That will be an exciting one to watch. Okay? Next up, McDonald's. We've been watching this one all week. Earnings are on the 5th. Hitting this trend line. Waiting for it to get to the 200-day. I don't think it's going to get there yet, so we're going to take McDonald's off the list. Next up, XLV. We got that one on the list as a holdover. This is the healthcare ETF in general. One, two, three. It's a quadruple top. If that means anything. On the call side, if you sold 146 and bought 148, you'd have to do that one. Small spread, $200 spread, 49 minus 25 divided by 2 divided by 200, 6% there. Interesting. 146. 146 is up here. I kind of like this one too. I think I'll open this one. 146. Liquidity's okay. We'll open this one and see if it gets filled, okay? 146, 148. This is a baby spread. So $200 at play here. Go to verticals. We're going to set the width as 2. Hold on 1 second. It's only 146 buying the 148. $49 minus 25. 24. Okay. 146, 148. Okay, so we'll sell one. Hold on. Got it backwards. Sell one February 146 call and buy one February 148 call. Limit credit of $29. Preview this. Sell one February 146 call to open. Buy one 148 call to open. Receive a credit of $29. We'll go ahead and send that one out. Okay. It'll hang tight here. 29 divided by 2 is 14. So we'll set, if this gets filled today, set a buy to close order limit debit of $14. Good till canceled, okay? Let's move on. TLT. We should have some great action in both the dollar, gold, the TLT, all this stuff within the next 24, 48 hours. We've got CPI tomorrow, and I think we got PPI on Friday. This will be fun. So it broke below. This has been the pattern. Every time it approaches the 200-day moving average, it breaks above, hangs out, and comes back down. Big time. Back last year, we sold a short call spread, and I remember somewhere around here. We've done a lot with the TLT over the past year or two. Same story, hit the 200-day, kind of waddled it around, and then sold off. Could this be the same thing? If inflation starts to pick up again, which is very possible, same thing, this is going to come down again, and we should have new lows in the TLT. Not a very common view, but definitely possible. So if inflation's hotter than normal tomorrow, this thing's going to come straight down. Call side for TLT before the news. If you sold the 101 and bought the 104, 57 minus 21 divided by 2 divided by 300, 6% on the nose. That seems fair. The 101 pays 57. The 92 pays 39. So we've got call skew here. Meaning you got paid more to sell the call side than the put side. So that means there's overbuying on the call side. And it's quote unquote more expensive. That's why we want to sell it. Hope that makes sense. We'll hold for tomorrow. Check it out. If this thing shoots up tomorrow because inflation's cooled off more so, I'd sell another call spread if it got to like 101 or something. Maybe even 102. But for now, I'd wait for after the news to come out, and then we'll do something, okay? Let's go to our IV rank scanner, and we'll sort by volume. IWM still up there. Let's check it out. So for me, I have the January expiration, which is next week, I believe. I've shorted the 197 and bought the 200, so a $300 spread for me. We are just on the razor's edge here, so I don't want to roll it yet, because if it continues to move down, we'll be out of this one to make our money. But if it continues to move up over the next week or so, we'll have to roll this one. So this one's just kind of a wait and see. When you have these big averages like the SPY, the IWM, the USO with really good liquidity, you can roll at the very last minute and get out of it and buy yourself some more time. That's what's great. That's why when you open new positions, liquidity's got to be there. What do you think of Oxy? We'll come back to IWM. Let's do Oxy first. OXY. Oxy's an oil play. Refinery, right? No news. Earnings are the 26th, so we're past February expiration. Here's our chart. We got this big channel, and that's what's concerning. So if you can get a breakdown below all this support, I'd sell the put side and could catch support around 53. So you see all the support here from 2022, 2023. If it breaks down below, you should get support around 53. So if you wanted to sell the put side here, I don't know if I would. I wouldn't sell the call side yet. It's too far. It's too far down. So put side for February expiration. The 52.5 is a little close. The 50 is too far out to get paid for it. So if you wanted to push it, sell 52.5, buy 50. So $250 spread. Let's do the math. 43 minus 19 divided by 2 divided by 250. You're only getting 4.5% return on that spread. And there's not enough volatility to make this worth it on the put side to sell the 52.5 cash secured. You're just not going to get paid for taking the risk. And 52.5 is awfully close. So when you sell, you want to have high volatility. When you have a big channel like this over the course of years, volatility is super low. According to my platform, IV rank is 0. We want IV rank to be as high as possible. I wouldn't open a position in this one right now. I'd wait for a good sell-off to happen and then sell puts. I'd stay away from this one for now. But good question. I've traded Oxy before. I think it was back in 2022 when we had this big move up. I think sold a call spread somewhere around here. Somewhere right here. And then several weeks later, I think it was on this day, back in April 22, it closed. But right now, yeah, put side I'd stay away. There's no volatility. So what happens is if you are going to sell the put side and you do get a big move down, the price is going to expand. The volatility is going to expand and the price is going to go up. So if anything, and I hate saying this, you'd want to buy puts, but I wouldn't buy puts here. Hold on this one. There are better opportunities. Good question, though. If you want something in the oil sector that's more volatile, just stick to USO or XOP. You get the liquidity's great. And like see here on USO, we open this, IV rank is 35. You know, is that ideal? The higher the better, obviously, but it's better than 0. When opening a new position, well, you always always use this IV rank scanner because you want to look for things that have high IV rank. This is the 30-day IV rank. But when you start your process, look for high IV. That's why when you're checking out the news in the morning, whatever makes the news means there's some kind of big movement. And when you have a big movement that's not priced in, volatility spikes. Good question. Let's go back to IWM. So IV's okay. You can also look at IV by this volatility chart here. I use E-Trade. So when this blue line's heightened, that's when you want to sell. It's historical versus average. Go back to the chart here. So we've had this big run up, sell off for a bit. Like I said, I've shorted the 197 and bought the 200. So right now both the spreads, this whole spread's out of the money. Just got to wait and see what happens. But if you want to open something new today, for February expiration, put side, if you sold 182, there's call skew on this one. I wouldn't sell the put side. Sell the call side. 207. Sell 207 and buy 213. $600 wide spread. 207. 127 minus 52 divided by 2 divided by 600. 6.2% there. 207. 207 on the chart is up here. For February expiration, that seems awfully close, so I'd stay away from this one. Cool. Back to the list. Remember, we have a bunch of earnings coming up. Microsoft probably has earnings October, September, December, January. Microsoft probably has earnings at the end of the month here. We'll move on. Meta, same thing, February 1st. AMD. We just closed our AMD trade. I think they have earnings coming up at the end of the month or early February. The tricky part here is trying to avoid earnings now. But once the banks start reporting and we get reports, we'll have hopefully some big moves. Marathon event on the 18th. We're also waiting for the Bitcoin ETFs to get approved. MARA down 3%. It'll be fun to watch the price action once this thing does get approved. We know the ETFs are going to get approved. They'll get approved in one big batch. There won't be a single ETF that gets approved. I think there's like 15 to 20 individual Bitcoin ETFs that are up for approval from the SEC. So they won't do just one or two. They'll either approve them all or deny them all, but they'll probably get approved. Just don't know if it's going to be a buy the rumor, sell the news, or buy the rumor and buy the news. A lot of this, all this big upwards movement here is the priced in action of these ETFs getting approved from the SEC. So it may be buy the rumor and then sell the news now. I'll be the first to admit I don't follow the Bitcoin market that much. It's not for me. But options on Bitcoin, now that's something. Good IV rank here. Yikes, so. We've looked at this one a bunch. It's hard. This one's hard. Put side if you sold 14. And I would do the spread on this one because I don't want to own this. Sell 14 and buy 11. You got 36 minus 11 divided by 2 divided by 300. 4.1 on the put side. The call side is where it's at. Tons of call skew here. If you sold, yikes, so this one's hard. We sold 37 and bought 42. This one seems evenly priced. 162 minus 111 divided by 2 divided by 500, 5%. You don't get paid for the risk you're taking. Where is 37 on the chart? 37 is way up here. And I know it looks far away, but if these things get approved and things move up, they're going to move up fast. So do what you want with that one. I'm going to stay away. Apple, we already looked at. Amazon has earnings. Coinbase, same thing. Coinbase is in the same boat as the other stuff with Bitcoin. MicroStrategies, Marathon Digital, Coinbase. There's a bunch of other ones. Steer clear if you want. Boeing, earnings on the 31st. They're in a pickle. Intel, earnings on the 25th. Keep an eye on that. Disney, February 7th. SoFi coming up. Google. Right, I think is another one of those Bitcoin ETF things. Bank of America has earnings. Exxon probably has earnings. Robinhood. Netflix has earnings. XBI getting killed on that one. Let's check it out. XBI I sold somewhere around end of November, right? End of November, early December, sold the call side, sold the 85 and bought the 90. Obviously, both my strikes are in the money, so we're trying to roll this one here. Got a week and a half to do it. But if you want to open something new today, call side for obvious reasons. So here are my open tickets trying to roll. If you sold the 102 and bought the 107, $92 minus 39 divided by 2 divided by 500, 5.3. It's not bad for an ETF, but put side. The put side pays 78. The call side pays 89. So a little bit to call skew still. We sold 83. I wouldn't buy the covering leg. I would just sell 83 right out. $83 is right here. That seems awfully close. I wouldn't do this one. Moving on. Pfizer has earnings on the 30th. No. PayPal. I think we already looked at PayPal. We've looked at PayPal the past couple days. We're going to skip PayPal. Uber. Citibank. Let's take a look at Uber really quick. I know we looked at Uber yesterday. Coming up, that's right. Wait for this one to make an all-time high, breaking above 63.5 or whatever the top was, 64, and then we'll sell the call side, but not right now. Just judging by the price action, it looks like you may actually want to sell puts on this one. Earnings on this one are February 14th, Valentine's Day. All right. He sold 52.5 and bought 47.5. 55 minus 18 divided by 2 divided by 500, 3.7. Sell the put right out if you want. Call side. Sell the 70 by the 75. 81 minus 33 divided by 2 divided by 500. No, don't do that. Skip the puts. Or sorry, skip both the call and the put side. Next page on this one. Almost done for today. LQD, UNG, Chewy. We looked at Chewy yesterday. There was nothing there. Snapchat has earnings. Affirm. We missed the boat on Affirm. QuantumScape. No. JP Morgan. We got eye on JP Morgan. Hold. We'll do something tomorrow maybe. ARM has earnings on the 7th. Unity, we already looked at Unity. We're waiting for 33 on Unity. Palo Alto. Taiwan Semi has earnings on the 18th. I think they pre-announced something today, though. TSM. Maybe I'm mistaken. This is what it was. Semiconductor Q4 sales beat estimates. That's what it was. It looks like the news has already sold off. We'll follow up after earnings next week, see what happens, okay? Plug, Lucid, no. American Express has earnings. CCJ traded that one last earnings report. Sold the call side, made our money. Earnings are in February, so we'll keep an eye on that. Cytokinetics had that big move up after the buyout. Nothing yet. Nope. Pass on Ford. Earnings on Onsemi coming up. Verizon has earnings. Delta has earnings. Zim. Lilly has earnings on the 6th, less than a month away. Love has earnings. Moderna, man, we missed the boat. We should have sold the call side. Just the liquidity wasn't there. It's already sold off. United has earnings. Win has probably earnings. Earnings on the 7th. Less than a month away. Look at their PE. I wonder if that's right. 325 times trailing earnings. Oh boy. I think that'll do it for today. Anything else? AT&T, Walgreens, Celsius, CELH. No, nowhere to go here. I think that'll do it for today. So, like, again, if this XLV position gets filled, set a buy to close order at 14. Good till canceled. Hopefully XBI will roll. Now let's keep an eye on the rest of these as the next week and a half plays out. If we need to roll, we'll roll. If not, we'll be fine, okay? And David, good question on Oxy. Hold on that one. We can find better opportunities, but good question. Thank you for asking. Tune in every morning at 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Like and subscribe and all that stuff. Also, tell your friends who are trading options to tune in as well. We can all trade options together. Thanks so much, everybody. We'll see you tomorrow. We got CPI in the morning. Hopefully that'll be a good market mover. Have a good one.